How goes it all? Welcome back to Patterson L Properties. Hopefully, you guys are having a great and exceptional day. If you do not know, Patterson L Properties, we wholesale real estate majority of the time via tax sales, tax liens, and we do the whole, marketing via text message blasts, emails, and sending postcards and all that good stuff. So, if you're a fellow wholesaler, if you are a fellow investor, if you are a fellow person who is in the distressed property market, or if you're a real estate agent, contact us. We'd love to connect, and we'll go from there. Our website's in the description. And do great free things like share and subscribe. I always greatly appreciate it all at the same time. And thank you for the Cash Apps and thank you for the PayPals and the Venmos all at the same time. Now, if you were alive and well during the 2007/2008 real estate stock market, global economic downturn, you remember lots of things, family. And I mean a lot of things, especially things like, loss of thousands upon thousands of jobs. Also, there were thousands upon thousands of lost homes due to foreclosures and predatory lending all across the country. And with today's real estate economic climate, housing prices are crazy and interest rates are up and going through the roof. According to the article that I read today, Jose Torres of Interactive Brokers has warned that there is going to be a huge drop in home prices across the United States of America. Torres expects the decline to continue in the coming year. Mr. Torres, supply and demand dynamics in the housing market are moving in a way that creates a perfect recipe for declining home prices. On the supply side, home builders increasingly started building homes across the country to catch up with the skyrocketing demand during the period of low interest rates from the beginning of 2020. Even though the housing starts denoted by the red line below have started falling, they remain at a higher levels. Interactive Brokers housing inventory was also up 18.7% year over year in June, according to Realtor.com, and has risen nearly 50% since the beginning of the year of 2022. Remember how I talked about for the last 2 years that there has been housing inventory brewing for a long time throughout the United States of America as far as a housing shortage, when it comes to inventory and whatnot, and it was all about the supply and demand effect. So during the pandemic, they specifically, a lot of other states were actually trying their best to increase the amount of housing that was in the country. But definitely during the pandemic, it definitely intensified in a big way. You know what I mean? So, well, the reversal, it has definitely happened because of multiple things, such as an increase in home builders and foreclosures going up. Because remember, during the pandemic, people were not allowed to foreclose upon a home or evict anyone. A multitude of homeowners are willing to lose money and come down on the prices of their homes. The article also stated that, but as the free money environment helped fuel 41-year high inflation rates at 9.1%, the Federal Reserve also pushed hard for a more drastic stance this year, with mortgage rates nearly doubling. Additionally, the average 30-year mortgage rates have climbed significantly, and that's another thing to take into consideration. They've climbed up significantly, and to about 5.8% after starting in 2022 at 3.1%. Freddie Mac data shows that's killing demand. A perfect storm is brewing in the real estate market due to nearly decade-high construction levels and dwindling demand. Mr. Torres, who is a senior economist at Interactive Brokers, said in the commentary, home builders said, geez, we are making so much money. There's so much demand. Everyone wants a house. Let's build like crazy. Mr. Torres added, now the Fed is reversing all that stimulus, but whatever construction was starting, it has to be completed. So it's a misalignment of timing between supply and demand. The going into 2023, the housing demand is going to skyrocket like a SpaceX missile, family, And at the end of the day, this is what is what happens a lot of times, unfortunately. Regardless who sit in the White House, governor's house, or mayor's house, there's a demand of, because a great example, if you can look at the car inventory issue in this country, a lot of factories were shut down overseas due to COVID violations and other things that were taking place, and the demand for people to buy cars during the pandemic went down. So, and now the demand has gone up, but there's lack of inventory. Same thing with the reversal with the housing market. If you look at the housing market, there was such a big demand for people to buy homes, and then there was a lack of inventory. Now they've intensified the amount of homes that have been built. Now the demand has gone down. And usually there's never any balance or stabilization to me when it comes to the economy, because as one person says, when it comes to capitalism, whether you love it or not, somebody's got to win and somebody's got to lose. It's the winners and losers aspect. And I think that's why people love sports so much, because they love being part of the winning team. They hate being part of the losing team, but then they love the chance that when the new season comes back, they have a shot to become a winner again. That's how America is at the end of the day. So you have a shot to become a winner. You might win some, you lose some, and you wipe your face and get back up again. But that's just how it is. And like certain industries, specific job markets, so the demand might be high. Like, great example with the trucking industry. The demand during the pandemic went up higher than ever. Now it's slowing down in certain areas, but it's not as high, as intensified as it used to be, because the world was shut down and more people were staying at home, and more people needed stuff delivered specifically to their homes and things of that nature. And they needed more and more people to become CDL drivers and owner operators and all that great stuff. Now things have slowed down tremendously, not to a crazy level, but it's not, the demand isn't as high as it used to be. But even buying a truck, is the cost of it is higher than it used to be, because there's a lack of trucks out there, and the demand for trucks is still high. So it's just a lot of things taken into consideration, just like cars. The demand, the supply is low, the demand is high. With the housing market, the supply is high, the demand has gotten low again. I always just call the U.S. economy nothing but a freaking merry-go-round, regardless of the situation. You know what I mean? But anyways, the article also stated that Mr. Torres said it would be a serious drop in home prices. He said he expects the average American home price to drop by 25% when all is said and done. Now, for investors like me, this sounds great. How much did the S&P Cash-Shiller U.S. National Home Price Index dropped during the mid-2000s crisis? The Federal Reserve Bank of St. Louis stated we are going to see a lot like what we saw during the Great Financial Crisis in terms of falling house prices, he said. But it won't be like it was back then, a crazy amount of foreclosures like it was back then. They just remember that, because a lot of people was hoping and praying that there's going to be a significant amount of foreclosures like it was during 2007-8 timeframe. I don't see that happening. I tend to agree. I just think prices will come down because demand is going down. I don't see the foreclosure rates getting as crazy as it was, because there was so much stimulus money that was put out from 2020 to 2022. And then there were so many people who were smart enough to do the right thing with their money and go from there. So he said he expects to see double-digit declines in 2023. And in the capitalist system that we live in, it's called winners and losers. Like I said, is the name of the game. The article ended on this note stating that overall housing activity continues to weaken as affordability pressures, risen inflation, and higher mortgage rates weigh in housing activity. Our economists discuss how housing demand is beginning to dwindle and tight housing supplies will grow, mortgage rates and things of that nature. And, for me, I just find it to be interesting at the end of the day. You know what I mean? I find it to be very, very interesting. And I just think that it's a good time for people to, as they would say on the TTP, talk to people platform, squad up. Families squad up like immigrants do. Squad up with your friends that are like-minded. Hopefully you're engaging with people who are like-minded in regards to wanting to buy more rental properties, maybe people who want to get into the real estate business on any specific level, people who want to wholesale, the whole freaking nine. It's just something to think about. But despite weak activity, tight supply should keep home prices higher, the bank said. Redfin's chief economist, Daryl Fairweather, was stated this earlier back in July that he didn't expect a more than 4% drop in a recession scenario due to the supply crunch. But the extent to which supply and demand dynamics are an input for what home prices do in the coming months is debatable. For example, the Federal Reserve published a research paper in June showing that price gains over the past 2 years have been driven by demand due to lower interest rates. So the interest rates are high, the demand is going down in certain aspects. So will it be at 25%? These are all predictions at this point, but we all know that the prices will drop eventually because it's just going to make sense. If at the end of the day, if the consumer cannot afford to buy the commodity, then the commodity we either perish or go down in price. It is what it is. Okay. I mean, to be honest with you, that's why fast food joints are, even to me, my personal opinion, even still in business. McDonald's will always be in business because they're really just a real estate company at this point. But but yeah, it's like because the cost of the food is cheaper than it actually is in a good restaurant like a Ruth Chris or Legal Seafood or any other high end restaurant, things of that nature. The food is definitely the quality of the food is worse. You can't even really call it food at this point, but quality of the food is worse than it is that you would find at a fine restaurant or whatnot. So it is what it is. At one of those steakhouse restaurants or Papa Do's. One of those restaurants where the food is better, the service is better, the atmosphere is cleaner, things of that nature. So. But so that I see the prices maybe going down. My prediction is it's just based off of the research I've done and what I've seen. I think the highest may be, I think 25% is excessive. I'm going to go with 10 to 12%. All right. That's just based off of the research I've done on various websites. What I've seen even in my area, the DMV area, I can see high prices going down up to 10%. But I'm not even going to just say that nationwide, because what the prices may be in California, Texas, and New York may obviously is going to differ from housing prices in places like Michigan, Illinois, Mississippi, Alabama, Pennsylvania, West Virginia, where the states, the North, South Dakota, Wyoming, where the cost of living is way dirt cheaper. Heck, even the state of West Virginia, I believe that's the only state where you can buy a house and not have any personal property taxes on. It's an incentive for a person to want to buy a house there. So I leave it at that. But on that note, family, do the great thing, free things. Like, share, and subscribe. Have a great day. As I always say, make money moves or you're going to live like a fool. Take care.